We're well into the week 3 of this year, and the market certainly seeing its fair share of ups and downs so far. What's the sentiment like about the Nigerian market at the moment from your perspective?
Well, obviously the sentiment is a very, very positive and bullish one for reasons that we've pretty much been talking about from the tail end of last year, which are three primary things. If you first of all look at where crude oil is trading right now in international markets, that's very good. If you look at sort of the political and geopolitical environment in Nigeria, things are improving significantly. And thirdly, if you look at sort of where we are in the market cycle, sort of an initial recovery phase. So these three things sort of just give you a good tailwind to the equity market. Now, if we sort of narrow down to what we've seen this year, it's been one that's been driven primarily by the banks and primarily as well by the 8 failed banks that were rescued last year. But to answer your question, the sentiment is extremely good, it's extremely positive, and it's a sign of good things to come.
Let's hone in on that banking sector then and take a look at some of the players that you are dabbling in right now. And from our chat earlier, you had highlighted specifically Access and Diamond Bank from a value perspective as looking pretty good at this stage.
That is correct. I'd probably want to stress Diamond Bank a little bit more because Access has rallied significantly to sort of where our price target is. We have like an 11.6 naira price target on that. Diamond Bank has been hit severely over the past few quarters because it's had to write down significantly, probably a lot more than its peers. It's had about 7 quarters of negative surprises, and that's sort of taken its toll on the stock. In our view, and just going by the company's guidelines, that's behind the company now. You add that to sort of an improved operating environment, and we sort of see the stock picking up significantly. Another name that we like here is Fidelity Bank. Fidelity has sort of suffered from an overcapitalization, as it were. A capital adequacy ratio of about 46% has sort of taken its toll on it. But we expect that to build on that. Its price to book value is about 0.5 here versus 0.9 for a lot of its other peers. If that picks up, we see some significant upside in that name as well.
Let's take a look at Fidelity Bank and the way it's looking to deploy capital, because we know that it's got capital to put to work. The question is how soon it's going to be lending aggressively to the market again and loosening up some of its credit lines. In that regard, some have highlighted that they need to start looking at the less traditional sectors of the economy, possibly turning their attention to the likes of the agri sector. What's your view on that?
Well, what is going on with Fidelity is pretty much what's going on with most of the other banks, which is one where they're being very cautious with the way they extend credit, obviously because of what we've just seen over the past year or two. If you look at sort of where credit normally goes to, you look at sort of the petroleum marketers, which a lot of them have stepped back on. You look at margin lending for people to buy shares, which a lot of them have stepped back on. Going forward, we see a lot of space and potential in the agri space, like you said. The big issue there, though, is that a lot of these banks, this is not a typical sort of industry where they lend money to. And so valuing that risk and valuing that credit is probably going to be a challenge. But we see sort of a broad-based increase in credit lending once the bank's books are cleared up, and that should be positive for the space.
With that, your position on some of the more stable players within the banking sector, what's your perspective on the rescued banks particularly? Are you still cautious in your approach towards that segment of the sector?
Very much so, very much so. If we just look at sort of a couple of things that are going on, let's look at just the market right now. If you look at what the beta of a lot of these rescued banks are right now, it's about 6 to 8. What does that mean? That for any correction in the market, you'd probably expect a 6 to 8 time move in those names. Look at what happened yesterday, for example. Market was up 1%, and AfriBank, which has really rallied significantly, was down about 2%. So we see a lot of volatility in that space. That's one. The second thing is this, is we don't quite know how sort of the takeover and M&A activity in that space is going to happen, which is a huge catalytic event. And so what does that mean is, you could see fresh players come in and dilute existing shareholders significantly, which will obviously hurt the stock. So we sort of just preach right now a sort of cautious approach to those guys. The one more thing I should add is this, is if you just look at a stock, for example, if it's trading at 100 naira per share, it falls 70% to 30 naira per share. And then it rallies some 30% from 30 naira. Guess what? It's only back to 39, which is not a lot. So what we generally advise is get out of these banks and sort of position yourself properly with some of the healthier ones.